All right. Hello, everyone. Thanks so much for tuning in today. If you guys find value in this, please don't forget to hit that subscribe button and also comment to me in the comment section. Let me know how you guys like this. But today I'm going to go through my trading style, what I do every day in, day out, so that you guys can follow me and, succeed in the stock market just like I do. So, I am the author of Trading Around the Cycle, which you guys can see right here. This is the cover of it, and you guys can get this book. It's in the link in my bio. But basically, what we're doing is we are trading around the stock market cycle. And you may ask, what is the stock market cycle, right? And this is what it is. So you're looking at a chart right now of the S&P 500 index, and if you invest in the stock market and you are a long-term investor, you will go through many cycles in your lifetime. And a cycle is basically just the stock price moving upwards in an uptrend. It plateaus, it begins to decline, and then it plateaus again at the bottom, and the cycle repeats. However, if you back up and look at the chart, you'll notice that after every cycle, prices get higher, companies will produce more income, and over time, the S&P 500 and all the stocks that are in it, or most of them at least, will continue to rise and innovate, produce more, profit more, and you can decide if you want to go on with them or get left in the dust. Choice is yours. But just think about the person who bought in 2000, and they could have been in the stock market for years and decided to sell at the bottom, maybe in 2002-ish, right? And they would have suffered a loss, and maybe they got out of the stock market and they didn't like it, and they didn't enter until way back, maybe into 2013. So they just wasted 10 years, and they gave up roughly 100% or so, right? So you could have doubled your money, but instead you found fear and thought the stock market was a scam, and you weren't into it. So they got out of the cycle, right? So they bought in 2000, they sold in 2002. They removed themselves from the cycle. And that's all it is. It's just, they were in a downtrend, they didn't like it, and they sold out at the bottom. You can also choose just to ride it out. And if you buy in the middle of a downtrend cycle and you hold and wait, and you get to the bottom and maybe you buy in again, you ride it to the top. Maybe you're continuously buying, or maybe you trim some shares and then you wait till it bottoms again, and then you just continue doing that over and over and over, and you stay in the cycle. The problem with that is that we all enter the cycle in at different times, right? So let's talk about more recent years here, okay? So if you got into the cycle at the top of 2019 here, you would have bought at a high, right? You would have bought here. And, technically this wasn't a great time to buy in, but if you're a continuous buyer, that very well could be where a lot of your purchases were taking place, right? And then what you get is that COVID happens and all the prices fall. And you got in at the high, right? And it feels bad because right now this is what you would see, right? You bought in at the high, it dropped. And you may be thinking that it's never going to get better. It's never going to go back to where it was before. But that's just how things work. Things go up really high. They fall really low. People get scared out of the market. They sell. And maybe they never enter the stock market again. But if you buy when it's high, it falls lower. You add when it's low. And then you just wait. You just wait it out. You're going to notice that you would have made money starting at, maybe August or so of the next year. So it takes a while for this to happen. But if you bought at the high and you didn't add at all, you would have been right back to where you were in August. And then the stock market just kept climbing and climbing and climbing until it finally reached another high here at the beginning, or rather at the end of 2021, right here. So as you can see, the stock market goes through cycles. Like I've said many times before, right? we're at a high and things are getting low now, right? There's a lot of fear in the market. You've probably heard a lot of people selling out of their investments, getting scared of the stock market. Every now and then you actually hear people say the stock market is a scam, right? People who are just angry that they bought in at the top or whatever. But what I'm here to do is trade around these cycles. And what I mean by that is that when you get in the cycle, you never fully get out. There's what we call position trading in the stock market, which means you hold a core position. And when times are bad or good, however you determine that, prices are low. So you want to buy in when they're low, collecting the dividends always, but you buy future income at a discount when prices are lower. This is because dividends are cheaper and you can buy income at a discount. So you buy when prices are down and prices will run up. And when you believe that that stock cycle is at a top, you can trim some shares off, collecting some profits to distribute those back to stocks that are in lows. You don't have to sell if you don't want to, but that is my strategy of how I buy stocks. I'm, pretty much only a long-term holder until my position size reaches the full amount, and then which I will, start to trim some of my shares when the prices run hot. So, what is all of this that I'm looking at? This is a chart of the S&P 500, like I said before, and through the charts you can see these waves, and these are mini cycles, right? So just like we saw on the larger scale here on the maximum chart. So you see the cycles here. Well, they also have mini cycles. And this is just mini cycles happening at a lot shorter time frame. So as you can see, drawing support and resistance lines here. And you can see back in beginning of May, we were right around this support level, and it dipped down until we created another support level down here. And when it ran up, and then it got rejected by this resistance. So old supports become new resistance. And I may be talking over your guys' head a little bit, but if you're new here, new to the stock market, just keep on listening and you're going to pick up stuff really fast. But what I'm doing is technical analysis. So I'm looking at the stock charts, looking at the prices every single day, and I'm determining when is a good time to buy for me. And sometimes on individual stocks, when's a good time to sell. So let's just walk through some of these stocks on here. And this is what I do every single day. I come on here, I look at every single stock on my list every single day because I'm looking for times to buy in. And I want to buy stocks that pay a high dividend because not a high dividend, but any dividend at all, because I'm trying to build up not only a stock portfolio, but a future income stream for myself. When I get, older and want to live off of my investments, I can do that. So right now in our market, we're actually seeing another decline. So it looks like stocks have fallen, like I said, past this support level around, 4,200 or so. And they've dropped to a level of 3,800. Held a solid support down here. And what I'm going to do is I'm just going to extend this line because this is the support level that I anticipate prices coming back down to if they do continue to fall. Because through technical analysis, you can find support and resistance lines, which are just levels that price tends to be attracted to. So if it falls back to this support level, it has a high chance that it will bounce off again and then get rejected from this resistance line once again. So price has memory. And that is the full thesis of support and resistance. So you can see right here is another resistance level, right? Price commonly gets rejected at this line here. So if price falls down to this support level at 3,800 and it rises and it goes back up to 42 and maybe it breaks through 42 finally, well, you can make a reasonable guess that it will get rejected at this 4,600 or it will try to reach that level. It may break through. It doesn't have to always get rejected and it doesn't always have to bounce off support level, but that's what you kind of expect to happen when you're doing technical analysis like this. So this is what I do day in and day out. And again, I'm just trying to identify high quality companies that are selling at a huge, massive discount. So next one I want to show you is things like Amazon. Now, although this doesn't pay a dividend, I mean, just look how low this is valued, right? So at its support level, we bought in down here. It has a 77% increase in price to get back to to get back to all-time highs, sorry. So if you believe that Amazon is going to continue to make money and it's going to do better than it has done in the past, in the future, then you believe that this stock, it has 78% or so to go and reach that amount. So we actually added in right here, and I send out my plays in, whenever I make them, usually on my social media, like on Twitter or something like that. And I also disclose all my trades on my free newsletter. So if you ever are interested in learning about, what am I trading? Like, what am I looking at? I try to talk about this as much as I possibly can, but let me just go over to the section over here. And this is my free newsletter that you guys can also get in the link in my bio. I'd be more than happy to, I love providing this stuff to you guys every single week. I come out with them usually every Friday when the market closes, so I can recap the week. So I show you what I bought last week and if I had new positions. And I didn't have any last week because nothing seemed like it was a really good deal and nothing was consolidating on a stage one. So I never did that. But here, this is the list of everything that I bought for the last, month or two. If I hadn't had a whole lot of trades, I'll just show all of them. And again, I like to talk about the stocks that I'm watching for next week. And I'll give you guys a little sneak peek to anyone who is tuning into this. Some stocks I have been watching are things kind of like Target or Walmart, which have fallen dramatically. So when I'm looking at Walmart, and it actually looks like it may be a good time to buy today. And what I'm looking for is just a zone of consolidation, right? And I like to buy around the support levels. So when Walmart fell dramatically, you don't know when it's going to be the bottom because it fell by, let's find out, 10% or so on one day. And you may be thinking, oh my gosh, Walmart fell by 10%, let me buy some. But then you buy way up here without knowing that tomorrow it's just going to drop another, let's find out, 10% or so? Yeah, 8%. And then in total, Walmart ended up dropping roughly 20%. So if you buy in right when you see a big dip, you're not actually going to get the best price, and you kind of want to wait to see how things are going to level out. But what happens when you wait? So you wait too long, and then all of a sudden price starts running from you. But in this game, you want to be consistent, and you want to always be thinking about the long term, which is exactly what I do day in and day out. So I actually just sat on it and waited. So it came down, established a support level, bounced off, and now it's actually coming back down. And so this seems like a decent level for me to buy in. So this might be something that I'm thinking about. It has 1, 2, 3 days of consolidation. I might give it one more day to see if it bounces above the 5-day EMA. And that is a sign of an uptrend, just like it did over here, you can see. And then that'll indicate that it's time for me to buy in. But we don't know if that's going to happen or not, so we're going to see. But with Walmart, how I broke down this stock is I noticed that it fell quite a bit. And I track these every single day, so I know that Walmart is obviously a high-quality company with a lot of past results, a lot of revenue. You probably have one where you live. I mean, they're everywhere, right? And what I like to do is say, all right, I know Walmart dropped by a lot, but realistically, what are the smart people, what are the analysts thinking about this stock? Do they think it has potential to continue climbing? What does the picture look like? And if you use this site, the one I use is called TipRanks. You can also find this on Yahoo Finance, Morningstar. There's a lot of websites that have analysts' opinion on it, but the one I use is TipRanks. So on TipRanks, you can see that right now, Walmart, so all of the analysts say, they go to all of the most prestigious business colleges and schools in the nation. And they, probably, they might have a CFA, they might, these guys are top-notch people who spend a lot of their time analyzing stocks and companies and all the financials and the management and the prices. I mean, these guys are, next level people who know what they're doing. And if you get a group of analysts together on one company, like this one has 27 different analysts, and they all make their predictions. And then what this website does is get an average of those predictions, and they put it up for you. So based on 27 different analysts, Walmart is projected to be worth roughly $157.11 per share. And that means that it has almost a 30% upside. And 30% is decent. Obviously, in this type of environment, if we go and we look at the S&P 500, you'll notice that from today up to the very top, we have about 18% to the top, which means that when the S&P 500 rebounds, you'll make 18% on anything that you are on the market if you buy it right now. And then looking at Walmart, if you buy it right now, according to analysts, you have about 30% or so to go. So with that being said, that checks off one of my boxes, right? It's a low RSI, which means that it's highly, highly oversold. Analysts think that it has a ways to go, right? 30%. And then I want to check if it pays a dividend. And not all companies have to pay a dividend. I do like high quality companies that I can depend on. So any company like that's huge, like a humongous, like I just talked about, Amazon. I really like Facebook right now. I'm also in that. There's a bunch. So just because I invest in something doesn't mean that it has to pay a dividend or anything like that. But Walmart pays, 1.83% dividend right now, which isn't great, but it's something. You invest in something assuming it's going to go up 30% and they're going to pay you to do it. I mean, that sounds like an awesome deal to me. So this is just how I do everything. Don't want to influence any of your decisions, but I'm just broadcasting what I do, how I make my trades. And yeah, if you have any questions about, what I'm doing here, feel free to DM me on Instagram or contact me through socials. Or check out my free newsletter, even look at the book, because that's going to have everything. That's like everything that's in my head about stock trading and stuff like that you can find in my book. It's about 60 pages long. I give you a bunch of examples of things that I trade and show you the charts and talk you through kind of everything. So thank you guys for tuning in today. Please, if you guys felt like I gave you a lot of knowledge and gave you a whole lot of value, please hit that subscribe button, and I look forward to talking with you guys at a later date. Peace.